Small and medium enterprise or SME are widely recognized as the backbone of Malaysian economy. They form the majority of business establishment and play crucial roles in driving economic growth, employment, and social development. In Malaysia, SME account approximately 99% of all business establishment. They are classified into micro, small, and medium enterprise based on annual sales turnover and the number of employees. Most SME, especially micro enterprise, operate in the service sector such as wholesale and retail trade, while fewer are involved in the manufacturing and agriculture. SME play a vital role as engines of economic growth in Malaysia. They contribute significantly to the country's gross domestic demand. SME also promotes industrial diversification by supporting various sectors of the economy and hence the resilience of national economic growth. Another important role of SME is employing creation. SME provide job opportunity to a large portion of the workforce, particularly in rural and semi-urban areas. Furthermore, SME serve as encouraging innovation, developing local talent and supporting women participation in business activity. Beyond economic contribution, SME play a significant social role in Malaysia. They support poverty reduction, promote more balanced income distribution, and enhance social inclusion. Through regional development, SME help improve overall socio-economic well-being. One key characteristic of Malaysian SME is their small size. They generally operate with limited capital, fewer employees, and short business system. Due to this limitation, SME often face higher business risk and failure rates compared to large firms. Many SME also lack formal organizational structure and operate in highly competitive and uncertain markets. From a financial perspective, Malaysian SME rely heavily on internal source of finance such as personal saving, retained earning, and family fund. Access to internal financial remains limited as many SME lack sufficient collateral and proper financial documentation. In addition, weak accounting records and limited credit history often reduce their ability to obtain bank loan. In conclusion, although Malaysia's SME face various challenges such as limited resources and restricted access to finance, their contribution to economic growth, employment, and social development is undeniable. Therefore, continuous supports and effective policy are essential to ensure the sustainability and long-term success of SME in Malaysia.
Hi everyone. One of the main reasons why small and medium enterprises or SMEs face difficulties in securing bank credit is the lack of collateral and insufficient financial documentation. According to Zabri and Lin 2014, although financing sources for SMEs in Malaysia are widely available, access to bank credit remains limited due to SMEs' inability to meet banks' requirements. One of the main constraints highlighted is the lack of collateral, insufficient supporting documents, and weak financial track record. In addition, Muhammad et al. 2020 explained that SMEs experience high loan rejection rates because many of them are unable to provide complete financial statements, clear cash flow information, and well-prepared business plans. Banks depend heavily on these documents to evaluate creditworthiness. When SMEs fail to present reliable financial information, banks tend to classify them as high-risk borrowers. Furthermore, a study by Harun and Ibrahim 2016 confirms that the lack of collateral is the most significant financing problem faced by SMEs in Malaysia. Their findings show that bank loan approvals are highly dependent on tangible collateral, such as property and fixed deposits. However, most SMEs, especially small and newly established firms, do not own sufficient assets to satisfy these requirements. As a result, many SMEs are forced to rely on internal funds or informal financing sources instead of bank credit. This situation limits their ability to expand operations, invest in technology, and improve competitiveness. In conclusion, based on findings from Zabri and Lin 2014, Muhammad et al. 2020, and Harun and Ibrahim 2016, the lack of collateral and insufficient financial documentation remain major obstacles preventing SMEs from successfully securing bank credit.
Small and medium enterprises play a crucial role in economic development by contributing to employment creation, income generation, and overall economic growth. In Malaysia and many developing economies, SMEs are regarded as the backbone of the economy. Despite their importance, SMEs continue to face serious difficulties in accessing external financing, particularly bank loans. One common obstacle consistently highlighted is information asymmetry, which lies at the core of SME financing challenges. Information asymmetry occurs when banks and financial institutions do not have sufficient, accurate, or reliable information about SMEs, while SMEs possess more information about their own business conditions. SMEs are often described as opaque borrowers due to weak financial reporting, lack of formal accounting records, and short business histories. This makes it difficult for banks to properly assess the creditworthiness of SMEs. As a result, banks face problems such as adverse selection, where they cannot differentiate between good and risky borrowers, and moral hazard, where they struggle to monitor how loan funds are used after disbursement. Similarly, that information asymmetry is a major structural weakness in SME financing. SMEs are generally low capitalized and possess limited collateral with a high proportion of intangible assets. Because banks lack sufficient information on SME performance and project quality, they perceive SME lending as highly risky. This leads to credit rationing, where bank either limits the amount of credit supply or impose stricter lending conditions such as higher interest rates and tighter collateral requirements. Further supports this argument by showing that many Malaysian SME loan applications are rejected due to poor documentation and weak administrative practice. Incomplete financial statement, poor record keeping, and weak banking history prevent financial institutions from accurately evaluating repayment ability. As a result, banks are reluctant to approve loans even when SMEs have variable business potential. This reinforces the problem of information asymmetry as banks prioritize transparency and documented financial performance when making lending decisions. The presence of information asymmetry created several interconnected financing challenges for SMEs. First, SMEs are perceived as high-risk borrowers, which reduces their access to credit. Second, banks face higher transaction and monitoring costs when dealing with SMEs, as highlighted in the article, making small loans less profitable for financial institutions. Third, SMEs often lack sufficient collateral to compensate for information gap, further limiting their financing options. Together, these challenges widen the financing gap between SMEs and financial institutions. In conclusion, the comparison of all articles clearly shows that information asymmetry is the key common obstacle underlying SME financing challenges. Weak financial records, lack of transparency, and limited business history cause banks to perceive SMEs as risky borrowers, leading to credit rationing and loan rejection. To improve SME access to financing, efforts must be made to enhance financial reporting, strengthen administrative capabilities, and develop alternative financing mechanisms that reduce reliance on traditional collateral-based lending. Addressing information asymmetry is therefore essential for ensuring sustainable SME growth and long-term economic development.
Good day everyone. Today, I will talk about one major challenge faced by SMEs in Malaysia, which is difficulty in securing bank credit, causing one main obstacle, which is long loan processing times and doubts about business viability, as well as ways to overcome these issues. First, the long loan process. Many SMEs face delays when applying for bank loans due to complex procedures and strict documentation requirements. Banks require audit financial statements, cash flow projection, tax records, and credit history. However, based on previous obstacles that we are already talking about, most SMEs, especially small and micro enterprises, lack proper financial documentation and administrative skills. Strict banking regulations, for example, collateral requirements and single borrowers limits, as strict lending also make it harder to secure loan. As a result,
Loan approvals take a long time, which affects SMEs' ability to meet urgent needs, such as working capital or expansion. Banks often view SMEs as high-risk borrowers because of unstable cash flows, limited operating history, and weak financial performance. Many SMEs are unable to clearly demonstrate their repayments capacity, making banks doubt whether the business is sustainable in the long run. This causes banks to either reject applications or impose stricter loan conditions. So, how can these issues be overcome without SME rely on informal sources such as friends and family rather than approaching banks? First, SMEs should improve financial management practice by maintaining proper accounting records, preparing audit financial statements, and developing clear business plans. This will help banks assess business viability more confidently. Second, SMEs can leverage alternative financing options such as government-backed loan schemes, development, financial institution, and credit guarantee programs like CGC, which reduce banks' risk exposure. Lastly, banks and policymakers should simplify loan procedures and provide financial advisory support to SMEs, especially new and small businesses, to shorten processing time and improve access to financing. In conclusion, while SMEs play a crucial role in Malaysia's economy, long loans process and viability concerns remain major barriers to bank financing. By improving financial transparency, utilizing support schemes, and enhancing collaborations between banks and SMEs, this challenge can be reduced. Thank you.